All right, we are on day 70, which means we are just 8 days away from the big day 78 token unlock. And with prices falling, I know the mood out there is tense, to say the least. But today, we're going to push past the price chart. We're going to dive into some pretty counterintuitive math that actually shows how the protocol is, in some really key ways, getting stronger.
And just a quick heads up, as always, this is all for educational and informational purposes. It is absolutely not financial advice, so please make sure you do your own research.
So let's just get right to it. The big question on everyone's mind. The price is falling. Should you be worried? And that's a totally fair question. The answer, though, really depends on which lens you're using to look at the situation. And that brings us to the real heart of this whole thing. There are two ways to see this. The emotional view is super simple, right? Price is down, so things must be getting worse. But then there's the mathematical view, which tells a completely different and, frankly, a much more encouraging story. It says the key ratios are improving, which means the protocol's health is actually getting better. Let's break down exactly why. Okay, first up, the first major mathematical improvement we're seeing is in the floor cushion. Now that's just the distance between the current price and the protocol's base floor price. Now check this out. Just yesterday, the price was sitting about 70% above the floor. Today, even with a lower price, it's a whopping 128% above the floor. Think about that. The safety cushion has almost doubled in just 24 hours. So you might be asking, how is that even possible? Well, picture a race. But in this race, the finish line, that's the price floor, is actually moving backward. And it's moving backward faster than the runner, the token price, is slowing down. So even though the runner isn't as fast, the distance between them is actually getting bigger, and that creates a much larger buffer to absorb any shocks. And this leads us right into the second big improvement, which is a massive reduction in the selling pressure for that upcoming day 78 cliff, specifically when you measure it in dollars. Let's rewind a bit. At the peak price of around 95 cents, the tokens unlocking on day 78 represented over $2.1 million of potential sell pressure. That's a pretty big hurdle for the market to jump over. But now, at today's price of around 41 cents, that exact same number of tokens represents just $918,000 of pressure. That is a 58% drop in the total dollar value that the market has to absorb. It's a perfect example of how a lower price can actually help diffuse the financial impact of a big unlock. And that's the absolute key here. The number of tokens getting unlocked hasn't changed at all, but the financial weight, the dollar value of those tokens, has been slashed by more than half. It's the same event, but from a purely mathematical standpoint, it's way, way easier for the protocol to handle now. Okay, this brings us to our third mathematical advantage. Because at these lower prices, the protocol's deflationary engine, I'm talking about the buyback and burn, is now working with some serious efficiency. In fact, serious might be an understatement. Burn efficiency has absolutely skyrocketed. For every single dollar the protocol spends on buybacks, it's now taking 132% more tokens out of circulation than it was at the peak price. Let's make that real. The protocol uses about $600 for the buyback and burn every day. So back when the price was 95 cents, that $600 would burn around 630 tokens. But today, at 41 cents, that same $600 burns over 1,400 tokens. Same money, more than double the deflationary impact. So all this theory is great, right? But the real question is, does it actually work in the real world when things get stressful? Well, the data is pretty clear. Let's look at the proof. The buyback and burn USDC pool, that's the wallet that funds the burns we were just talking about, has now grown for 9 consecutive days. For 9 straight days, the protocol has been stacking more cash in its war chest. And look, this wasn't during some calm, boring market. This 9-day streak happened while the market endured a 50% price crush, a full 100% bounce back, a dive back into extreme fear, and the start of some of the early unlocks. And through all of that chaos, the engine just kept chugging along. This is probably the most important thing to get about the protocol's design. The yield doesn't come from the token price. It comes from trading fees. So that very same volatility that causes fear and makes people trade, well, that creates more trading, which creates more fees, which feeds more yield right back into the system. The engine literally gets stronger from the chaos. And, these recent early unlocks have given us a little preview, like a dress rehearsal for the main event. And yeah, as you'd expect, some people sold. But more importantly, the protocol absorbed those sales exactly the way it was designed to, which really proves the mechanics are sound.
Okay, so with all of that under our belts, let's look forward. We've got 8 days left in this countdown. Let's talk about what you should actually be paying attention to.
Here's the roadmap. Day 76 is the first real test. We'll see about 174,000 Plazm unlock. Then, just 2 days later, on day 78, we get the main event, the big one, the 2.29 million token unlock. So instead of just getting hypnotized by the price chart, these are the numbers that will tell you the true story of the protocol's health. Is that floor cushion staying nice and wide? Is the BNB USDC pool still growing? How's the staking percentage holding up? And what about that all-important price versus floor ratio? These are the metrics that really matter. So if there's one thing to take away from all of this, let it be this: fear sees price, math sees ratios. And right now, as we head into this final countdown, the ratios, the numbers that truly define the protocol's strength and its ability to handle what's coming, are all improving.